Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik and welcome to episode 20 of my Dow Analysis series. In this video, we'll be analyzing the 12th largest company in the Dow by market cap, which is Merck, ticker symbol MRK. With a market cap of $226 billion, Merck is a global healthcare company that delivers innovative health solutions through its prescription medicines, vaccines, biologic therapies, and animal health products. They operate in two main segments, which are pharmaceutical and animal health. Within the pharmaceutical segment, Merck generates revenue by selling therapeutics, preventative agents, and vaccines to wholesalers, retailers, hospitals, governments, and physicians. Within the animal health segment, Merck generates revenue by selling veterinary pharmaceutical and vaccine products for the prevention, treatment, and control of disease in all major livestock and companion animal species. This segment also offers a suite of digitally connected identification, traceability, and monitoring products, which I really like to see that because as a healthcare company, they're sort of taking part in some sort of software or tech products, which is really the future in all industries. So I like that they are taking part in that. The pharmaceutical segment makes up the majority of Merck's business, producing about $42.8 billion of revenue in 2021. This was about 88% of Merck's total revenue, and subsequently, the animal health segment generated $5.6 billion of revenue in 2021, which accounts for 12% of Merck's revenue. Within the pharmaceutical segment, Merck offers many drugs and vaccines, but actually about 40% of the revenue from that pharmaceutical segment is from a drug called Keytruda, which is a treatment for some various types of cancers. So I'd say it's generally not the best thing that Keytruda accounts for approximately 35% of the whole company of Merck's revenue, but its patent protection doesn't expire until 2028 in the US and North America and until 2030 in Europe. So they definitely have plenty of time to, first of all, make lots of money from Keytruda, but also, expand and invest in their pipeline so that they can have other drugs that really start to generate some revenue as well once the growth from Keytruda starts to decline towards the end of the 2020s. Now, looking at the Q2 2022 earnings report, Merck reported revenues of $14.6 billion for the quarter, which was actually a 28% increase from the second quarter 2021. This is pretty significant, but we also want to look at another number where they excluded the effects of Lagravrio, which is a drug for treating COVID, which is likely, somewhat short-lived in their revenue. So when we exclude the effects of that drug, revenues for Merck grew 18%, which is still really awesome. And so it's good to see that, their core business is still growing a lot. When we look at earnings per share, GAAP EPS was $1.55 in the second quarter compared to just 48 cents in the second quarter 2021. So that's awesome to see. And they also raised guidance for revenue and earnings per share. For revenue, for the full year of 2022, guidance is now $57.5 to $58.5 billion, which is a growth of 18 to 20% compared to 2021. And then for GAAP EPS, their guidance is now between $5.89 and $5.99 per share. And when we look at the balance sheet, cash actually increased over $1.5 billion in just 6 months to $9.7 billion. Right now, these comparisons are from the end of June 2022 to the end of 2021, so only a 6-month comparison. And I think that's really interesting because a lot of companies seem to be decreasing their cash position right now, whereas Merck is actually increasing it. Looking at current assets, overall, they increased about $2 billion to $32.1 billion, and current liabilities decreased about $700 million to $23.2 billion. This gives Merck a current ratio of 1.39, which means they have more than enough short-term assets to pay off their short-term liabilities that are due within the next year, which is awesome to see. Total assets were up about $1.4 billion to $107.1 billion. And they don't list the total liabilities, but we can easily find that just by taking the total assets and subtracting the total equity. And from that, we get total liabilities of $63.8 billion, which is a decrease of $3.6 billion from the end of 2021. And when we look at debt, their debt is down as well. Total debt is around $31.7 billion. which gives them a debt to equity ratio of 0.73, which is pretty good. But we can also look at the debt to equity ratio 6 months ago, and we see that it's right at 0.87, and that's really a pretty substantial decrease, in my opinion, in just 6 months. And we can also kind of get a better picture of debt with the net debt. So right now, net debt is around $22 billion, and it's actually down about $3 billion from the end of 2021, which is awesome to see yet again. So overall, the balance sheet is really healthy, I think. The assets are growing like we saw, the liabilities are decreasing, and it doesn't really get much better than that, to be honest. So I really like that they are working on reducing debt, and looks like it's coming down pretty quickly recently. And looking now at the dividend, they have a solid yield of around 3%, and they have a very healthy payout ratio of just 35%, which means only 35% of their earnings are being used to pay the dividend, which is awesome. And they have been growing the dividend for 11 consecutive years, which isn't, super long, but it is a start to what could be an awesome track record. And over the past 5 years, they've grown the dividend on average 8% per year, which is pretty awesome. And when I looked at earnings per share growth over that time period, over the last 10 years or so, earnings per share were growing around 8% per year as well, which is really good to see, because that means that the earnings are growing 8% per year, and that is allowing them to grow the dividend at 8% per year. And so, as long as they can continue growing those earnings at that rate, then we can expect the dividend to continue growing at that rate as well, which is really awesome, I think. And now starting to look at some valuation metrics, Merck's PE ratio right now is 14, which is significantly below their historical average of around 25, which they've averaged over the past 10 years or so. So that's definitely a good sign to see initially. When we look at earnings, they have been a bit choppy, not super consistently growing, but definitely growing very strongly over the past 10 or 12 years, which is good to see. And comparing them to their peers, Merck's is in the healthcare sector, and the average for the healthcare sector PE ratio is 23, and within the drug manufacturers industry, the average PE is around 20. So in both instances, Merck is undervalued compared to their peers, which is a good sign as well that Merck may be, undervalued in general. Another valuation metric that I like to use is a discounted cash flow model. And when I did this calculation, I got a fair value for Merck of $73.64. And with a 10% margin of safety, this gives us a buy price of around $66.27. So this is, a fair bit below Merck's current price of around $88. So generally this shows that Merck is more fully valued than the P ratio kind of led us to believe, but that's totally okay. We're also going to look at kind of a chart and technical perspective as well to get some more insight on that. And looking now at the 3-year chart, we can see there's some pretty decent support around the $70 to $72 level. They touched that multiple times over the past 3 years, which is definitely good to see. The last 6 months, we can see the stock has kind of broken out of that trend a little bit, but it's been pretty volatile in general recently, as has the whole market, and it's definitely recovered a little bit. Looking at the 1-year chart as well, really not much more to see there. We can just see the breakout a little bit better, and we can see that they do have more support around the $71 level within the past year even, which is a good sign. So I think, Merck could go either way. If the market continues going up, they will probably continue breaking out of that kind of sideways trend. But if the market sees more pressure in the coming months, I think Merck could definitely fall back to the low 70s, and maybe even below that, which would definitely be a lot better opportunity, I think. Merck definitely has a very strong portfolio of pharmaceutical products that are bringing them a lot of cash, and I really like this. I like all their products, and I like that they have one big drug that is doing great for them, but they're also investing in their pipeline in a lot of other drugs that could also be that at some point in the future for them. I do like that they have this animal health segment, which offers a little bit of diversification outside of the traditional pharmaceutical segment, but it also gives them some software exposure, which I really like as well. In terms of the balance sheet, I think that looks really healthy, and the fact that they're assets are growing and liabilities are decreasing is just, all you can ask for in a balance sheet, to be honest. And the debt situation looks pretty healthy. I don't think there's really any worries about the debt at this point. In terms of the dividend, I think the dividend is really strong in terms of the yield. 3% is pretty solid, and combined with that, they do have an 8% dividend growth rate over the past 5 years, which is awesome. And I think they will probably continue growing the dividend somewhere in that range. So for me, Merck actually is a stock that I really like, but for me right now, I don't own it, and I really don't plan on adding it anytime soon, just because I do have a lot of exposure right now to the healthcare sector. I own 3 companies in the healthcare sector, and that accounts for 15 to 20% of my portfolio, so a pretty substantial portion there. And I really just don't want to add any more healthcare at this point. But I think in the lower 70s is a really nice price for Merck, and I think we could see it get there within the next 6 months or a year, which would definitely be a good buying opportunity for some people. So let me know what you guys think of Merck down in the comments below. I really appreciate hearing back from you guys, and hearing your thoughts as well. So just want to thank everyone for sticking around to the end of the video as well. I really do appreciate that, and I will see you all in the next one.